In less than 10 years, I'm certain that humanoid robots will surprise everyone with how good they will be. That bold prediction comes straight from NVIDIA CEO Jensen Huang at CES 2025. Welcome to The Explainer. We are standing right at the edge of a massive wealth generation event. I mean, we've spent the last few years watching artificial intelligence absolutely revolutionize software and digital spaces, right? But now, that intelligence is getting a physical body. And for those paying attention to the markets, the stakes are literally massive. Today, we're unpacking the humanoid gold rush. We are moving way beyond just software AI and into a tangible, trillion-dollar physical frontier. And more importantly, we're going to laser focus on exactly how the stock market and private capital are reacting to this huge shift. If you want to know how to actually gain investment exposure to the companies building our automated future, well, you're in the right place. All right, let's dive into this. We're going to break down this explainer into 5 key areas to systematically make sense of this messy, rapidly evolving market. We'll cover the market boom, look at NVIDIA's infrastructure, check out public stocks, dive into ETFs, and finally explore the highly lucrative private frontier. Okay, Section 1, the humanoid market boom. Think about the perfect storm brewing right now. You've got persistent labor shortages, rising wages, and these exponential advancements in AI all colliding to create the ultimate setup for automation. Just look at the sheer trajectory of the capital involved here. Morgan Stanley is forecasting $24 billion in revenue by 2035, accelerating to $238 billion by 2040, and then hitting a staggering $1 trillion by 2050. Elon Musk even suggested we could see 10 billion humanoid robots operating by 2040. Now, while that specific number might be heavily debated, the underlying trend is totally undeniable. The total addressable market here is honestly one of the largest we've seen in modern history. So why now? Why are these stocks suddenly viable investments after literally decades of science fiction promises? The answer boils down to 2 words: physical AI. For years, machine learning was just kind of stuck in digital loops. But today, the rise of multimodal models means AI can process vision, language, and motion all at the exact same time. Robots are no longer just pre-programmed to do one repetitive task over and over. They can actually perceive their environment, reason through complex problems, and act autonomously. This is the exact technological catalyst that is making humanoid companies investable today. Let's move on to Section 2. NVIDIA, the AI infrastructure. Look, before any of these metal and motor creations can take a single step, they need a digital brain. And in the investing world, that means looking at the ultimate picks and shovels play of this gold rush. Welcome to NVIDIA's Omniverse. Instead of building a million physical robots just to watch them hilariously fall down the stairs in reality through trial and error, companies use the Omniverse to train robots synthetically. They learn and fail in this highly accurate virtual world millions of times before a single line of code is ever uploaded to a physical robot. It dramatically reduces R&D costs and time to market. This foundational role is a huge reason why NVIDIA's market cap sits around a massive $5.1 trillion. For investors, NVIDIA represents a much lower risk, infrastructure-level entry into next-generation robotics. Because NVIDIA supplies the processing power and the simulation environments, they're capturing value regardless of which specific robot manufacturer actually wins the race. It is a completely full-stack approach. They sell the massive GPUs required to train the AI models, they provide the Jetson Edge computing modules that literally sit inside the robots to process sensory data locally, they offer the Isaac software platform for operations, and of course, the Omniverse for simulation. If you're looking for a foundational stock in the robotics boom, NVIDIA is essentially taxing the entire ecosystem's development. Which brings us to Section 3, public humanoid robot stocks. Now, what if you actually want to invest directly in the prospectors? You know, the companies bending the metal, building the actuators, and bringing these humanoids to market. Well, here are the highly visible public players vying for global dominance. In the US, you've got Tesla. Over in China, you have UB Tech and the consumer electronics giant Xiaomi. And in South Korea, you have industrial powerhouse Doosan Robotics. These are the publicly traded tech giants and pure plays actively building the hardware. Tesla's Optimus program is arguably the most famous one out there right now. They're aggressively targeting mass production preparation by April 2026. Elon Musk has even stated he believes Optimus will become Tesla's most important product, projecting it could eventually drive 80% of a future $25 trillion valuation for the company. Now, as focused investors, we do have to inject a healthy dose of reality here. Tesla has a long documented history of delayed timelines, and the technical challenges of general manipulation are just immense. But their manufacturing scale undoubtedly makes them a top public contender. But contrast that with what's happening over in China. where the approach is heavily industrial and fiercely supported by government initiatives for robotics self-reliance. UBTech's Walker S2 is a perfect example. It's designed specifically for smart factories, featuring incredibly fast 3-minute battery swaps and swarm intelligence, so multiple robots can easily coordinate on a factory floor. It is way less about the consumer hype and heavily focused on immediate industrial ROI. Moving right along to Section 4, diversifying with humanoid ETFs. Let's be real, picking individual stock winners in a nascent market like this is risky. Some are inevitably going to fail. So for investors wanting broad exposure without the single stock volatility, we look to humanoid ETFs. A prime example is the KOID ETF. That's the CraneShares Global Humanoid Robotics and Physical AI Index. They don't just buy the robot manufacturers, they invest across the entire ecosystem. They buy the brains, meaning the semiconductor and tech companies. They buy the bodies, which are the companies making actuation systems, sensors, and critical materials. And they buy the integrators, the actual manufacturing companies putting the whole shebang together. KOID is currently sitting at over $240 million in assets under management and holds 50 different stocks. What's really fascinating is looking at their top holdings. You have companies like Harmonic Drive Systems. They don't build the actual robots, they build the literal gears and rotary actuators used to control humanoid joints like shoulders, elbows, and hips. It's just a highly diversified way to capture the upside of the physical AI trend while mitigating those company-specific blowups. And finally, Section 5. The private robotics frontier. Here's the wild part. A lot of the most advanced pure-play companies aren't even trading publicly yet. They're backed by massive venture capital. The crucial point here is understanding the trade-off. Public markets offer you high liquidity. You can buy and sell instantly and great transparency. But finding a pure-play humanoid stock is incredibly hard. Most of them are heavily diversified into cars or other electronics. Private markets, on the other hand, give you direct access to cutting-edge, 100% focused robotic startups. The catch? It's highly illiquid, and the failure rates for early-stage tech are significant. Let's just rattle off some of the heavy hitters where the bleeding-edge venture capital is flowing right now. Figure AI recently hit a $39 billion valuation and is prepping a facility to build 12,000 units a year. 1X Technologies, backed by OpenAI, is already taking $20,000 pre-orders for their Neo Home robot. Agility Robotics is scaling up their bipedal digit robot for logistics, and in China, Unitree is gearing up for a massive $7 billion IPO. These are the unicorns truly driving the hardware revolution. Historically, access to these kinds of private tech deals has been locked away for institutional investors and billionaires. But platforms like Ex Machina DAO are emerging to democratize this access. By using a decentralized ecosystem, they pool community resources to secure allocations in these highly sought-after private frontier deals, giving non-institutional investors a potential backdoor into the private robotics boom. Okay, let's take a breath for a second. Before you go completely reallocating your portfolio, we need a sober reality check. The execution reality of this space is tough. Industry experts project that truly widespread, generalized adoption is still 5 to 15 years away. Right now, these companies are experiencing massive R&D capital burn. They're spending billions before they see a dime of true profitability. The execution risk for these unproven commercial models is incredibly high. You're going to need immense patience and a really strong stomach for volatility. We are standing at an inflection point where artificial intelligence is stepping out of our screens and into the physical world. The consensus among the smartest money in tech is that physical AI is the next internet. The companies that solve this will dictate the global economy for the next century. The technology is accelerating, the capital is flowing, and the market is taking shape. So the only question left to ask yourself is, are you positioned for the humanoid revolution? Thanks so much for hanging out for this explainer, and I'll catch you in the next one.